Hello everyone, Dividend Enjoyer here, and today I'm going to be doing my weekly review of my $30,992.22 portfolio. Today was a huge day for the account. We were up $424.30 with an overall gain loss of $959.03, not including any dividends. We've moved up to now having $581.58 in estimated annual income, or dividends that should be paid within 1 year's time from now. If I had all the same stocks and they didn't increase their dividend at all, that's how much I'm estimated to be making. I'm kind of going to go through the bottom and just work my way up to each individual stock, kind of give my thoughts on each one. Obviously, it was an incredible day today. I just want to say that. I think that we are coming back to a full bull market. I think that we are going to see, a lot. I think we've already kind of seen it. It's been kind of affirmed in a really extreme way because you have this conflict in the Middle East that should be, really shocking markets and really scaring us. But because the Fed is on our side, because there have been so many people who've been sitting out of the stock market for so long, I think that there's a lot of buyers of any dips that we have. And therefore, there aren't really a lot of, events that can cause significant dips anymore because there's a lot of people willing to kind of step in and buy shares as they dip, like they have been, or whenever there's a dip, there are buyers there, there's support there. And I think we've already kind of seen the bottom. I think that we're going to continue to have momentum going up. I think that now you're going to have people with FOMO getting in. And I really think also that rates are going to end up going to a downtrend, and companies are going to be able to borrow for cheaper. I mean, the risk-free rate is going to be lower, which is going to be great for stocks. And I just kind of want to highlight that this is a very interesting point in history, because I think looking back, this is going to be a big bull market, but I could be very wrong. And I just kind of want to make that statement here so that this is kind of a time capsule of that, because it really feels like to me that everything's going to continue to go higher. But I could be wrong on that, and I'm not a financial advisor, and it's not financial advice. But in my, unprofessional opinion, I think that we're going to see tech stocks start to roar a little bit more. I think that they're going to run. I think that we're going to see new all-time highs in tech again at some point. I think it could be by the end of this year, but I don't think that we're going to be able to see the prices that we saw before. Speaking of a stock that was at a price that I'm probably not going to be able to get again, we have Hasbro, ticker symbol HAS. Currently up overall $122, dang, 52 cents on it, or 10.7%, bringing the overall value to $1,267.85. It's kind of crazy that that's the lowest value position in the portfolio now. I was kind of looking back and, started this challenge, I guess, or this review, and I was at $9,000. But Hasbro overall, I've kind of talked about this at length. I think that it's starting to recover. I know that a lot of people are very, very bearish on Hasbro. I understand why. It's had shrinking revenue in the past. But I think that Wizards of the Coast is really going to carry Hasbro. I think that we just experienced a really negative bear market in the card world, which really hurt Hasbro since that was one of their biggest segments. But I think that the toys are also going to be making some money. I think that they can do a lot of digital things with their IPs. But I'm mainly buying this because I think that Wizards of the Coast and Magic the Gathering are very bullish into the future. And, I will have to reevaluate this if the card kind of market cools down. Then I'll probably get out of Hasbro. Next up, we have Meta, ticker symbol Meta. This has been the position that's been up the most as a percentage basis. And that's not even including the stuff that I've sold also, which is what I got into my Hasbro position with, funny enough. But Meta, I think that the they're going to be a huge profiteer of AI, specifically in advertising. I'm a long-term holder of this. I don't plan to sell any of my shares. Up $305.79 as of recording this video. Very happy with the investment. Don't really want to add more here. But I made a lot of videos, talking about Meta and how I really liked Meta. And what's funny is like those videos where I'm like, doing them for research purposes, and I actually find like, oh man, this is going to be like something that I want to add to my portfolio. Those usually aren't the videos that I end up doing as well. It's usually more niche things that people are looking for. So I added a decent amount of Meta for a cheap price. I plan on staying in Meta. I don't plan on selling my Meta. I'm going to hold it for the long term. See what happens there. Could sell out though and buy Waste Management, but probably not going to do that. I think I should hold Meta for the long game. Next up, we have Apple, ticker symbol AAPL. Been adding more of this. I got 8 shares. Current value $1,602.40. Total gain loss up $16.42. I think I'm going to be buying this anywhere below 210. I think I'm going to continue to add Apple weekly. I've kind of talked over the past couple of weeks about how I wanted to add an Apple position. I think that it's too low for what it is. I think that the company is being really kind of undervalued right now, and I wouldn't be shocked if this dropped more. But I really want to position in it. I want to own it. I think that the iOS kind of users are more valuable. I think that AI is going to unlock more value from the user base to be able to spend on Apple's ecosystem. I think that they're somehow going to make money off of that. I'm also bullish that, whenever they're working on a big project, they don't tell the public. So I kind of want the doubters to get out. I plan to hold this Apple position for a while just to kind of see, in the future I might reevaluate and say, yeah, they really haven't been growing as much. This was clearly a value trap. And this could bite me in the butt, but I really like this position. I think the long term is going to be a very fruitful one. It's already up 1%, but in the future I think that this is going to really get back to all-time highs and create some new highs. So I think that they're going to benefit from the AI, landscape. I think that they're very focused on what brings the best customer experience, because they've kind of already built up a really big thing. They don't really see the need to invest in this stuff when they don't necessarily have a use case. I kind of support that. I think it'll be interesting to have the one company that doesn't spend a ridiculous amount of money on AI in my portfolio, especially when it's so cheap relative to its history. Next up, we have Prologis, ticker symbol PLD. This is a triple net real estate investment trust. I've kind of explained what they do in every other video, so I'll just say they own a lot of warehouse real estate, and they rent that out with all the liabilities going on the renter. So I really like this business. I think that it's a good business. Not really adding or selling at all with most of these stocks. It's kind of the case, but really like Prologis. Solid dividend yield. It's paying me almost $64 a year on $1,700 in value, up $58.46 or 3.55%. That doesn't include dividends they paid me. I think we've secured to the point where we should be getting paid. Yeah, I'm getting paid around the 15, right? A little over 15, I think. And then I've gotten paid, I think, in the past, like $10. I don't know. There's other gains in here that aren't kind of included in the overall thing. But Prologis, I've been very happy with. I think that it's a very good company. It doesn't really move very much. It's not volatile, which I kind of like. I kind of like that it just pays what the rent was in dividend. And I think that they're going to be more valuable because I think that warehouse space is going to be more valuable going into the future. Next up, we have Texas Roadhouse Inc., ticker symbol TXRH. Currently up only $56.68. This was just getting rammed. I mean, this was a stock that got hit actually probably the worst during the conflict that was happening, and I picked up 2 shares for cheap, or yeah, I think it was 2 shares. I picked them up for real cheap in the 180s, I believe, in the low 180s, I think. Um, but this stock overall, very happy to own it. I love how aggressive it is. I think that the growth is there. Um, I think that you'll make more money with this stock, though, the longer you hold it, because I think it's just going to look cheaper and cheaper over time. When there's big dips like that, I like to be able to buy in, and especially when it's not something that I think really materially hurts the brand. Like, it didn't make sense to me that Texas Roadhouse would be down 6% based on any macroeconomic anything. I think it was just that small caps got hit, or maybe, a big shareholder sold off into that stuff happening. So I like Texas Roadhouse, pays me a decent dividend, but I really here to root on a company that I think is very solid and I think has very high growth potential into the future. Next up, we have American Express, ticker symbol AXP. Currently, this stock is up $279.57, or 10.86%. Currently, estimated income for the year is $30.36. And the total value of my position is $2,854.69. Next up, we have Waste Management, ticker symbol. Or wait, no, I need to actually talk about American Express. Sorry. That was crazy that I almost just totally skipped it. I think I added a little bit of this too, like $50 or something. Really wish I would have snagged more of this under 300, but also really wish I had more money to throw into everything. I think that American Express is very good because of the network effects it has. I think that, they're very unique in that they own the debt that they're offering to people, and they also are doing all the transactions for their cards. So I really like American Express. I think that Visa is probably the big dog in terms of transactions, but I think that American Express offers a lot of card holders a lot of value, especially people who like the travel and the rewards programs. Overall, I think that this business is going to continue to grow, and I'm very bullish on American Express as a whole. Next up, we have Waste Management, ticker symbol WM. Currently up $176.83, or 6.6%. I've been routinely adding to this, even at the current price. I don't really mind. I kind of see this as just a very stable investment. I would love to get, personally, I would love to get $10,000 invested into Waste Management, just because I think it's going to slowly grow over time, and I think that investment is going to be extremely safe, and I think that that's a significant enough of an amount of money that, if I was ever really in a pinch, I could just sell my Waste Management and know that that money's there, and I don't have to worry about, a lot of different economic pressures on it. I think it is a little bit expensive for what it is, but if you're willing to hold it for at least a year, I think you're still getting a pretty good price. Forward PE, I think, would be pretty good. Overall, very bullish on the stock. Again, it's not paying the highest dividend in the world, but their growth track record and just the amount of defensiveness you get is very good. This has obviously been dropping a little bit just because everyone's kind of taken on a little bit more risk again. So hopefully we can get this back down into the 220s and I can really pull the trigger and buy a lot of it, because I think that this is a very solid company with very solid earnings and a lot of good growth prospects. I expect revenue to continue to grow, and if you just look over the long term, they've just consistently been outstanding, and I'm happy to be a shareholder in this company, and I would love to own more shares of this company. Next up, we have Amazon, ticker symbol AMZN. Currently up $167.53 on this, or 4.19%. Overall, not really much to say here. I think that this is the highest quality company that there is on the planet Earth, probably, in terms of just everything. I think that they're continuing to grow at a very spectacular rate, and I expect that Amazon's going to continue to be able to grow. I think that their valuation has been lofty in the past, especially in that 52-week high of, what was it? I believe it's in the 240s. I think that Amazon will get back there, but I definitely think that this is the type of time that you want to get in. I think anything above 220 for me is going to be a little pricey, but I also think that prices are just coming up overall. I think the whole market's rising very significantly. I think that we're starting to see the rise. Just because every time there's a dip, people are there to buy it up. And we've really seen the momentum today. I mean, I think there was a lot of FOMO. I think that the Fed's on our side right now. They're willing to cut rates. And I think that things are looking pretty solid overall. I think that, we kind of were in a bull market because everyone thought everything was bad and that it could just never get better. And I think that it's starting to get better, and I think that we're starting to enter into a bull market. I really do. And I want to own companies like Amazon going into that because it's just very high quality, very good growth. I think that AWS is going to be the future. And overall, I'm very happy with this position. Again, up $167. That's a pretty solid gain. Overall, pretty solid company, I would say. Next up, we have Vici. This is a triple net real estate investment trust, kind of like Prologis, but they own about half of the physical real estate on the Las Vegas Strip. A little under half, I think. Again, this is all from memory too, so if I butcher anything, again, I'm not a financial expert. This is not financial advice. But Vici owns the physical real estate, meaning that they don't actually operate the casino. They just own the building. The casino owner still pays for everything as, in terms of like the taxes on the building, the maintenance on it, the renovations, everything falls on the person renting. This is obviously a very good business because a lot of casinos aren't going to default. They're not going to give up their space. They're going to be able to pay their rent. And as long as the casinos can pay their rent, Vici makes their money. They continue to buy more experiential real estate, which then brings in more cash flow, which then gives me a higher dividend. So overall, I think that this is an amazing business. I love the fact that I'm able to own a decent amount of Las Vegas real estate and that I'm able to make a lot of money off of that. And Vici's been a great holding. Again, up $228.26 or 4.05%. Again, only put $5,500 of my own money in. Now it's worth $5,860 because I've reinvested some dividends. I think I'm going to continue to reinvest dividends, but overall, really happy with this business. Also really want to get this to $365 in annual income. So then I'm making $1 a day off of just this, one business. Because I just, I really like Vici as a whole. I want to add more to it. And I think that the dividend's great. I think it's sustainable, and I think that this business is going to continue to grow. Last up, we have the best day I think I've ever seen from Salesforce, ticker symbol CRM, up $195 just today. Total value $6,825.93 as of recording. Overall gain loss, only thing we're down on now, 6.22%. Very happy with this business. Again, I'm happy with all my businesses, as you can probably tell. I've been adding more to this as well. I think I'm just going to keep adding Salesforce as long as I'm down in it, just to kind of dollar cost average it. But yeah, I think that Salesforce is going to have a very strong future in the AI world. I think it's going to be very interesting to kind of look back at this video because I really think that today was a big day. I think that this was the start of something really good or something really bad. But there's certainly a lot of volatility going on. I mean, we could see a sell-off this week, but my thesis is that we're probably entering a bull market because I think that people have been way too bearish on tech for way too long. People have been way too bearish on the country. It's not just up to Trump what happens in the market, but I also think we avoided a lot of very catastrophic events with what unfolded and what is unfolding currently in the Middle East. And, you know, I'm going to bet that the good outcome happens because I really don't want the bad outcome to happen, right? And I don't think anyone does. So um, I think it'll be okay. I don't have anything to gain from thinking that things are going to end up poorly, so I'm not even going to make a bet on that. I think that we're entering into a bull market, though, guys. I think that things are going to be really good, and I'm really excited for the future, but man, I wish I had more money to have thrown into stuff earlier. So those are kind of my overall thoughts and ramblings. I hope that they were cohesive and made sense to everyone. I hope you gained something out of this video. Thank you for watching this far into the video. I really appreciate it. Please hit that subscribe button if you made it this far. Thank you for watching. Bye.